So today's class, we're going to be discussing or talking about market zones. Market in economics, they say when you're in a market, what happens in a market is buying and selling, supply and demand. You come there, you
Yeah.
see something, and there's somebody there to sell for you. And you as a buyer, you have a seller that will come and sell for you. But if you're a buyer and you come to a market, there's nobody to sell. No activity is going to occur there. You're just going to go back home with your money the same way you came. But they have to be a seller for there to be a buyer. And they have to be a buyer for there to be a seller. Now, in the trading world, what that means for us is some people call it supply and demand. Some people call it resistance and support. Have you heard something like that?
Yeah.
Exactly.
Mm-hmm.
What that means is these are keys, they call it zones because these are key areas where traders look for selling opportunities or buying opportunities. You cannot just enter the market and say, you cannot just open your chart and say, okay, because this market is trending upwards and it is creating series of lower high and lower low. Okay, yes, I'm going to sell. You want to come to where you will meet your fellow sellers. You want to come to where you will meet somebody that will buy for you. I'm trying to say that they will not be buyers if there are no sellers. Sellers and buyers, they are interchangeable. So when you hear demand, just know that that is for buyers. Or when you hear support, just know that is for buyers. When you hear supply or resistance, just know that is for sellers. So I want to map out where the demand zone is for this market. So when you see that, when we've already established that trend is our friend, that when we open the chart, the first thing we want to look out for is we want to look out the direction or the trend of that chart. So when you know that, when you've identified that the direction of this particular chart that I am looking at is an uptrend or is a bullish trend, that means what are you looking for? You're looking for a support zone. Again, if you look at a chart and a chart is on an uptrend or is bullish, you are going to take a position from a demand zone or from a support level. If it's the opposite, you're going to be looking for position on the supply zone or on the resistance zone because you want to sell. That's why I gave you this instance that when you want to sell, you sell from the top. That top is the supply. That top is the resistance. It means that nothing can come up. That this is resisting you from going up. So you want to come down because this is where sellers are and they are pushing the market down. That's why you say the market is going short or the market is falling or the market is selling. Why on this? If you want to buy, you don't want to buy from the top. You want to buy from the low because buyers are there to push the markets. So we're going to map out now that the trend that we're looking at, the direction of this market in front of us or this chart in front of us is an uptrend. You cannot be in an uptrend when you've identified that you've done your thorough research and you've done your thorough analysis that yes, this market is on an uptrend. You can once you've identified that this market is an uptrend, why are you looking for a supply zone? What zone should you be looking for if a market is on an uptrend?
Demand zone.
Exactly. When the market is on an uptrend, you'll be looking for a demand zone for you to take your entry because you do not want to sell, you want to buy. And if you want to buy from the low and not from the high. Demand is for buyers, supply is for sellers. Support is for buyers, resistance is for sellers. If you are looking at an uptrend or a bullish trend, what you're looking for demand zones. Don't see because of yes, you've learned demand zone, there's supply and there's demand. Then whenever you look at a chart, you're looking for this. Yes, yes. You can also look for the both of them, but you only look for the opposites when you want to take profits, not when you want to enter. Always take notes when you want to enter a trade and you've identified that the direction of that trend is an uptrend. You want to enter from a support or a demand zone. Then when you want to take profit, you want to take profit from the nearest zone. Now, the nearest zone where you're supposed to take profit is going to be from the nearest supply or resistance zone. Why? Because you're going up. Now, if the direction of that particular chart is a downtrend, you want to enter that market from a resistance or a supply zone, and you want to take your profits from the nearest zone, and the nearest zone will not be a demand or a support area. We've established that this is an uptrend. That means another thing for us to understand that yes, a particular zone is a strong zone. The market will always come there to react. Is market will react, market will make touches of it. Market will come to that area 2 to 3 times, nothing less than 2 or nothing less than 3. Now, this is a demand zone or a support zone. Yeah. And I will say that yes, it's strong because why? The market touched it 1, 2, 3, 4. That's why I always said you should asterisk the line chart and the candlestick chart because both of them are going to help you. Now, when you now go to the candlestick, you'll see that price even also reacted here as well because price now used this place as a resistance zone, which is another thing. Yes, exactly. A demand zone for a bullish trend can be a resistance zone or a supply zone for a bearish market. See how this particular zone was a support zone or a demand zone for buyers, and now it ended up being a zone for the sellers. I'll even say this particular zone 1, 2, 3, 4. When you map out your rectangle, so use your rectangle to map out support and resistance zone or supply and demand zone. You can also use your line chart or your candlestick chart. So when you use your line chart gives you a cleaner view. But then when you switch your candlestick, you see that it's either a weak touches. You see that this particular zone has been touched multiple times. You can see this chart. This chart is going on a downtrend. So we are now going to highlight where is our resistance going to be. So I'm going to bring up my rectangle icon, and I'm going to start mapping out areas that I believe are strong levels of resistance. And I'm saying resistance or supply because this is a downtrend. So right in front of us, this is a key resistance zone because price reacted to this place. This is 1 week. It reacted here, but it rejected. Then he did another thing here as well. Rejected. He did again here. Rejected. Another one again. Rejected. So it just automatically means these zones now are strong resistance zone because it was touched or it was mitigated 1, 2, 3, 4. This zone is strong. So just know that anytime price is coming here, you want to pay attention to how price will react from this place because this is a valid zone. Now, this is another zone. This is another zone. If you switch it to, let's say we switch it to the line chart, you can see clearly. But even if you switch it to the candles chart, you will see that wicks always comes to eat into it. So that's why I always recommend when you're tracking out, when you're finding out your key zones, you want to use both the line chart and the candlestick because the line chart will not show that, okay, price got there. But when you switch to the candlestick, you will see that the wick has actually come to that place. So wick is also valid in as much as, yes, the full body is great. The wick is also valid. So now you see that price touched here, 1, price came here as well, price reacted here, and price reacted here. So this is how many reactions? 1, 2, 3, 4, which means this is a key resistance zone. Now, so this is another supply zone that can also serve as a demand zone. Remember, I said to you that a demand zone can also be a supply zone. This is a supply zone, meaning sellers can decide to want to enter the market from here. But what happened? It was now used as a demand zone for those that are buying. Now that we've identified, okay, yes, you can have multiple zones. Yes, you can also, in addition, you can have multiple zones. You can also have mini zones as well. Mini zones being that that's the likes of the lower highs and the higher lows. Now, in terms of the downtrend, which is we're looking for a lower high for us to enter the end, for us to take our entry, because I made mention of the fact that you cannot enter a sell market from a lower low. You have to enter a sell market from a lower high. So your lower high can also serve as your resistance or supply zone in the terms of a downtrend. While in terms of an uptrend, your higher low can serve as your demand zone or your support zone. So now that we've identified that this market is on a bearish trend, let's assume that this is where the price is and we want to enter the market. We're going to enter the market from a lower high, or we're going to enter the market from a resistance level. That means we're going to look for an opportunity from the top, because sellers are resting at the resistance zone or supply zone. Because if you say you want to enter a sell here, this is where the price is exactly on the sell market. That means you're basically saying you want to enter a buy, because you cannot sell from low. You have to sell from high, and you have to buy from low. For cases like this, I tend to use my ground box. For cases of me looking for multiple zones, I use my rectangle. For cases of me looking for exactly a resistance or supply zone or a demand or support zone, I like to use my ground box. So now let's say, okay, yes, now I assume that, not even assume, this is a resistance zone, and it also even has multiple touches. It means that this place is solid because we have 1, we have 2, we have 3. So let's say we use our rectangle. We see that the price has touched this zone, price has touched this zone, price has also touched this zone. There's every possibility that price might react here. But for me to always be on the safe side, I always like to map out my entry at the highest or at the lowest of a particular trend. So I'm going to bring out my ground person and I'll say, I want price to, let's see if price will come to give me an opportunity here. To establish that this is a downtrend. Now we're looking for an opportunity to enter the sell from where?
From the lower high.
From the lower high, or from the resistance zone, or from the supply zone, because that is where sellers are. Now we now mapped it out. Now said, okay, this is a zone. Price might probably react here. Let's see how it goes. Or price might probably come to react at this top lower high, which SMC traders, they will say the candle that created the impulse move is called the order block. Price will always come to react at the order block because they believe that sellers are resting here. Liquidity is more gathered here. Stop losses are gathered here more. So we're not saying, okay, yes, let's see if price will react first on this our first area of interest. Now, your supply or demand zone can also serve as your area of interest, because when you open your chart and the first thing you're looking for is a trend or a direction of that particular chart, the next thing you want to do is you want to look for where you will enter a position, either a buy or a sell. That place automatically means your area of interest. That is the area you are interested to take a trade. So since we've already come to this chart and we've established that this chart is on a downtrend, that means this chart, this particular asset is selling. We are not looking for a position to sell. And that position to sell, we're looking for it on a supply zone or a resistance zone. And now we've now mapped that area of interest. We will now wait for price to come there to give us an opportunity. Until then, we'll keep waiting. So we now said, okay, let's see. So you see, price came almost close to this rectangle, this particular zone that we said is valid because it has multiple touches. Now, what did he do? He started to sell. But because of the fact that I said to you that when price comes to your area of interest, you don't just see because of, yes, price has cut into my area of interest, let me leave, let me enter a buy or a sell. You want to wait for added confluence to be sure that this thing is ready to go that direction that you speculated. What that happened, we're not saying, okay, if this thing is selling, I want to see a break of structure happen. We've already established that when price is coming to your area of interest from a downtrend, it will be creating a series of higher highs and higher lows. Now, this thing has already created a high, and this is going to be the low. So I'll say, let price come and take this zone. When price takes it, breaks it, corrects it, then I can be certain. At the same time, you want to look at where will be your take profits. Originally, I keep emphasizing the need for you to always take your profit on the nearest zone. So where's our nearest zone going to be? Is it going to be A or B?
A.
So we cannot, I said to you that you want your chart, the trend is your friend. Your chart is your friend. Your chart is the one giving you an illustration of what is happening in that asset that you want to trade or invest in. So don't come and form a chart that is not there. B does not have anything for us. There's nothing on B. There's no price action on B. Nothing has happened on B. So we cannot even be certain that it will even come to B. That's you predicting the future that price will come to the B. Look at what is happening right in front of you, first of all. And what is happening right in front of you, first of which price has already given us an information is that A is the nearest zone sensibly you want to target. So now that price has come to this particular zone now, we'll now say, okay, let's see if price will actually move as speculated, come to my area of it, to my take profit, which is this, the A, the horizontal, the trend line A. Now, we already see that, okay, yes, let's price come here for me to be very certain that price is ready to go my direction, which is to sell. Let me wait for a break of structure. So now waiting on that, a break of structure happened. Because the structure broke with weak, I'm not okay. Let me look for an a place to enter, because I cannot just enter when it has already broken. I want to now look for where it started to break from. Realistically, it's just only advisable that you start from the top. You start from where it's breaking from, because one thing you need to know is do not chase the market. I keep emphasizing, do not chase the market. Even if you feel like you've missed out on your entry, market will always come and give you another opportunity. If it does not give you an opportunity, no problem. There will always be an opportunity another time. Don't rush the market. Do not chase the market. Now, since we've established that this is going to be our take profit, and price has broken here, price has not even given us any indication for us to continue. Instead, it even came into my take profit. I automatically cancel that trade. I know that trade is not for me. I will have to keep waiting for my second area of interest, which is this one. So I'll say, let me see what price will do here. Because since I know that price will always come and give me another opportunity, let me wait it out. And price eventually came to my area of interest. Now remember the first touch it did. Any beginner will see, oh, this thing has touched first. Okay, let me enter. No, I always want to wait for another confluence, another confirmation. I'll say, okay, this is going to be the low. Once this low has been broken, because we've already established that this is an uptrend. It's creating high, it's creating low, high, broke it, created another higher low, broke it, higher low, broke it. So this is an uptrend. I am not looking to enter a buy. I'm looking to enter a sell. So until I see a series of lower high and lower low, then I will know that I am in a sell market. So before that, I will wait. So this is going to be my lower high. I want to see price break here, give me a correction and see that, okay, yes, this is no longer an uptrend. This is now a downtrend. So that's what I'm going to keep waiting for. Now, price has broken. I'll not say, okay, perfect. Now, price, can you come back now to this place that you broke from, which is also a valid zone? Because remember, it has 1, 2, 3, 4. It has even tried to even touch here, but it didn't. 5 here. So let's see if price will come to this place to give me an opportunity. Now, price came. What did price? The price went bullish. I said, okay, that means you're probably not ready to buy, because it's all the manipulation that you can be able to, that if you're very strict with your rules and say that I need to see a series of lower highs and lower lows after you've broken structure for me to be confident that yes, you're ready to sell, you can be able to avoid losing so much capital. So with that being said, I'll not say, okay, price has already come to this place. Okay, great. Now let's see if it takes it again with if it breaks the structure. And what did you do? It started to sell. And it came into my profit. So typically, when we're on the daily time frame. When you go to let's switch to the 4-hour time frame and see what this is. Because when you switch to because remember, higher time frame are for you to identify the direction. Lower time frame are for you to are for you to take your entry. When you move to the lower time frame, that's when you now start seeing that, okay, yes, this price is already ready. Remember this was our entry for us to take profits, and price was consolidating. That means when you see this consolidation, it means that buyers are losing momentum. It means that buyers are becoming weak. Sellers are about to take over. What now happened? Sellers now pushed this market down to this particular zone. Now we will now move to the 1 hour. Exactly. So now when we now move to 1 hour, we'll now see that, okay, 1 hour price has broken this structure that we say price should break. Price has broken this structure. Now price pulled back, corrected, pulled again, and corrected. So what that automatically means is that means that my price, my market, that means this particular asset is ready to sell. What I will now do is I'll now bring out my short position, because since I'm entering a sell market, I'll bring out my short position. I will set my stop loss above the lower high. Then I will set my take profits. Sometimes I don't even like bringing it all the way, because in case market comes to kiss it and pulls back, so I always try to give it space, but identifying that, okay, this is what it is. Now, this very engulfing bearish candle shows that buyers are now in control. Market has now switched from higher highs and higher lows to lower highs and lower lows, because it has broken structure, it has pulled back, and it has come down. It's an engulfing bearish candle showing that sellers are now in control. So what does that mean for me? That means for me that, yes, now I cannot take my position, and I will enter immediately that candle closes. I'm going to give you a cue, which was one lessons I learned the hard way. You always want to wait for candles to close. Sometimes a candle can be coming bullish, or can be coming with a very engulfing force, either bullish or bearish. You will see it as, yes, this market is about to sell. You will say, okay, yes, I'm confident this market is about to sell. You enter. When that candle closes, that candle will close with a wick. Are you seeing this position now? I'm pretty sure that some people that enter this market might probably see that this market is going to sell now. Now it closed with a wick. So you always want to wait for candle to close, no matter how patient you are, no matter how you feel like. This is where it will now teach you patience. I mentioned.
So where do you put your entry? You put it on the wick, or you put it in the middle of the engulfing?
Immediately the candle closes, another candle opens immediately, and I set my position. Because first off, you want to set your position, set your stop loss. I remember I always mentioned, give your stop loss breathing space. Don't put it exactly where the wick stops. Give it breathing space. So I'll give it breathing space. Then I'll set this. That's the benefits with this tool. This tool just gives you everything. If you look at this particular tool, look at your right hand side. Are you seeing this number 113283? That is already telling you that this is where you're going to take your entry, and your stop loss is going to now is showing you at the top 111456. That is your stop loss. If you now come there, you say, where is going to be my take profit? Now look at it. Your take profit is showing you 123,098. That is the figures that you need. Then you now go to my FX book. Remember that my FX book that we did. We'll now go there, we'll impute all this information that we've gotten, so that it will now give us the lot size that we need to enter this trade. So we're now going to go to our MetaTrader 5, execute it, and wait it out. And as you can see on this chart, our analysis was accurate, because price came into our take profits. And our risk to reward is 5-1. Do you see the reason why it's always very crucial to always aim for a good area of interest, or from a good zone? With that being said, do enjoy the rest of your day. And
thank you, Coach. Have a good day.
You too, Menti. Bye.